Good morning, folks. Hope everyone's doing all right. Happy Thursday. Big Thursday. Could be, you know, everything points to a historical Thursday, given the fact that we are walking into potentially the first ECB rate hike since 2011. So, welcome. But before we get to that, just some APAC updates. So we had Chinese trade data from overnight, just completely blowing estimates out of the water. Um, uh, you know, doubling basically from estimates on exports and imports, and we have the strongest trade surplus numbers in basically for the year. Um, this and also tight supply obviously, playing into the idea that, seeing these numbers and potentially China lockdowns, getting lifted, we are, this thing about China demand coming back onto the market, really spurring this crude market, right? So we had an expectation on the DOE numbers overnight to come in at draw, a smaller draw than the prior week, but instead we had a build. And what happened was this monster $2 and then some rally. And right now we're just consolidating over near the highs there, nestling on the 122s, there and thereabouts. Low of day, pretty much, to the tick, being that temporary support for the time being. If you do break through, I reckon 121s would make a decent buying opportunity. Um, Speaking of all right, so next on the docket, let's just run through this, is the ECB. There's a daily chart of the euro. As I mentioned, it's the same. It's the same levels we're looking at. Just a bit tweak maybe over here, right? So the spot still holds around 06500. So the thing here is that ING Economics put out a research report yesterday saying that because data has been good and inflation is off the charts, anything during the presser, so we are expecting a 25 basis point hike. If they don't deliver, I mean that'd be insane if they don't deliver the hike. But during the presser, this is the important part. So ECB President Lagarde would have to then communicate her basically the committee's willingness to raise rates by perhaps 50 basis points, because how they're going to break down the rate hikes going forward, so it's what you call forward guidance, will be key here. So if they're not willing to, even consider 50 basis point hikes anytime, in the immediate future, it might be disappointing to markets, potentially disappointing to markets, because they need inflation to basically die off. Um, Speaking on inflation, we are also awaiting the inflation report from the US tomorrow. A global GDP tracker, the Fed's global GDP tracker, is signaling that the US economy might actually be on the brink of a recession. So how they're going to play this is going to be absolutely key. On one hand, same with the ECB. On one hand, you have different parts of the economy still staggering. You need to fight off inflation, and that's why rates are rising. But at the same time, if we are heading into a recession, that means it's going to be a massive slowdown of global of growth. And rising interest rates is going to negatively, it will have a huge negative impact on basically fighting off inflation. All right, so they are trying to steer a very big boat, a very big ship through a very tight squeeze here. How they're going to manage this is, I've seen some central bankers do an exquisite job. Lagarde and Draghi, even Powell with how they manage communication to do this. But it goes to wait and see. So I hope this was useful. Any questions at all, please feel free. Hit me in the comments. Here's in the Duncan Capital Discord room. This is Reed with Reed's Rant. Sorry, this is Reed bringing you the daily briefing. Cheers.